Welcome back to Financial Market Insights for Traders, the show that breaks down what's happening in the world of finance, investing, and trading, and what it all means for you. I'm your host, Sophia, and today we're looking ahead to a big one, the 2026 stock market forecast by experts, and what's next for NASDAQ and the global markets. If you've been wondering how to position yourself for the year ahead, whether you're trading tech stocks, watching macro trends, or just trying to make sense of what's coming, this episode is for you. So grab your coffee, settle in, and let's unpack where the markets are heading in 2026. Let's start with the big picture. The global economy is entering 2026 in what analysts are calling a delicate equilibrium. After the chaos of inflation spikes, aggressive rate hikes, and geopolitical turmoil over the past few years, the world finally seems to be stabilizing. Inflation is easing back towards central bank targets. Growth is modest but steady, and unemployment remains manageable. Economists are calling it the soft landing that stuck. Here in the US, GDP growth for 2026 is expected to come in somewhere between 2 and 2.5%. It's not explosive growth, but it's sustainable, and it's driven by a mix of solid consumer spending, rising productivity, and more efficient use of AI and automation in business operations. Outside the US, it's a mixed bag. Europe's still lagging, weighed down by structural issues and slower manufacturing recovery. But Asia is the clear bright spot, especially India and Indonesia, which are benefiting from booming populations, infrastructure investment, and digital growth. Even China, which has had a tough few years, looks set for a mild rebound thanks to government stimulus and a push into clean energy and domestic innovation. So, heading into 2026, the foundation looks more balanced than it's been in years, though, as we'll get into, the challenges are far from over. Now, let's zoom in on the markets themselves. The 2026 stock market forecast by experts can be summed up in two words: cautious optimism. Most of the major investment banks and research houses are predicting positive returns next year, but they're tempering expectations. We're not likely to see the euphoric rallies of past bull runs. Instead, experts expect measured, earnings-driven growth. For the S&P Wink with tongue sticking out 500, projections center around an 8 to 10% gain. Analysts think sectors like tech, healthcare, and clean energy will continue to lead. The NASDAQ composite, on the other hand, is expected to outperform, possibly up 12 to 15%, as the AI, semiconductor, and software industries keep driving innovation. The Dow Jones Industrial Average might lag a bit, mostly because it's heavier on cyclical and industrial names that don't have the same growth story right now. Of course, all of these forecasts assume inflation stays under control and central banks stick to their slow, steady rate cut path through mid-2026. If that changes, all bets are off. Now, what's next for NASDAQ specifically? This is where things get really interesting. After years of roller coaster volatility, the NASDAQ seems to be entering a more mature phase, one that's less about hype and more about consistent, profitable innovation. Artificial intelligence is still at the heart of this story, but instead of broad, speculative bets on anything labeled AI, investors are focusing on companies that are actually executing, those that are using AI to drive measurable productivity gains and real cash flow. We're talking about chip makers, data infrastructure providers, and automation leaders, the kind of businesses turning AI from a buzzword into a business model. Then there's clean technology. With major economies doubling down on carbon neutral commitments, clean energy is seeing a revival. Battery innovation, EV infrastructure, hydrogen production, all of these are becoming mainstream investment themes. In 2026, we're likely to see a major rotation within NASDAQ as capital flows from megacap tech into the next generation of green innovators. And here's another big shift: profitability is back in style. The market's rewarding companies that can sustain strong margins and cash flow, not just those growing fast. In 2026, discipline will matter as much as disruption. So which sectors look strongest overall? Technology still leads the pack, driven by AI commercialization, semiconductors, and cloud infrastructure. Healthcare also looks solid, especially biotech and medical innovation, thanks to demographic trends and ongoing R and amp winking and laughing breakthroughs. Clean energy is high on the list too, with capital pouring into renewables, electric transport, and sustainable materials. Meanwhile, financials are expected to stay neutral, as rate cuts could narrow lending margins. Consumer discretionary stocks might perform well, thanks to stable employment and real income gains. And real estate could quietly recover, especially in data centers and logistics hubs that benefit from lower financing costs. So the opportunities are there, but they'll require more precision than in previous cycles. Now, we can't talk about 2026 without mentioning central banks and interest rates. After a grueling tightening cycle, the Federal Reserve and other major central banks are finally moving into a phase of gradual easing. By mid 2026, the Fed funds rate could settle near 3%. That's a big shift from the post pandemic highs, and it's already helping stimulate borrowing, corporate investment, and spending. But policymakers remain cautious. No one wants to repeat the mistake of cutting too quickly and reigniting inflation. So we can expect slow, deliberate moves rather than aggressive cuts. For investors, this means interest rate sensitivity is still key. Tech and real estate may benefit from lower borrowing costs, while banks and insurers could feel the squeeze of shrinking margins. The key is balance, positioning across both growth and defensive assets to ride the policy transition safely. Now, let's talk risk, because 2026 isn't all smooth sailing. Experts are keeping a close eye on several red flags. Geopolitical tensions remain high, especially in areas like the Middle East and the South China Sea. Any flare up there could hit energy prices and global trade. Corporate debt is another concern. After years of cheap money, many smaller firms are struggling to refinance. If credit markets tighten again, we could see a wave of defaults. Then there's regulation. Governments are tightening rules around AI, data privacy, and monopolistic practices. That could reshape the competitive landscape, especially for the biggest tech names. And of course, we can't ignore the climate factor. Extreme weather, energy volatility, and the cost of decarbonization could all influence inflation and commodity prices. Finally, it's also an election year in several major economies, including the U.S. Political uncertainty always makes markets nervous. Expect volatility around major votes and policy announcements. So yes, there's optimism, but no shortage of risks. Given that backdrop, how should investors approach 2026? The experts' advice is pretty consistent. Diversify intelligently and prioritize quality. Don't go all in on one region or one theme. Combine U.S. tech exposure with opportunities in Asia and emerging markets where valuations still look attractive. Focus on companies with strong balance sheets, sustainable margins, and genuine competitive advantages. Stay liquid enough to react quickly when volatility hits, because it will. And most importantly, use the right tools. Fast, accurate data and execution are essential in a market this complex. That's why it's worth checking out crystalballmarkets.com, a world-class, cutting-edge, and user-friendly trading platform app designed for serious traders who want speed, precision, and insight all in one place. You can explore it at crystalballmarkets.com/platform. It's a great way to trade smarter and stay ahead of market shifts. And if you're newer to trading or want to strengthen your macro understanding, you'll love the Crystal Ball Markets podcast. It's packed with beginner-friendly discussions about trading, investing, and financial markets. A perfect resource to deepen your confidence before the next big move. You can find it on our ss.com/podcast/crystalballmarkets. So what's the takeaway? The 2026 stock market forecast by experts suggests a year of measured opportunity. Growth looks steady, innovation remains strong, and inflation is largely under control. The NASDAQ, after years of volatility, is maturing, shifting from speculative tech hype to sustainable, innovation-driven profitability. For investors, success in 2026 won't come from chasing the next shiny trend. It'll come from discipline, adaptability, and clarity, understanding where real value lies and using the best tools to capture it. So as we move into a new year, stay informed, stay strategic, and trade with purpose. The markets are always changing, but opportunity never disappears. It just evolves. I'm Sophia, and this has been Financial Market Insights for Traders. Thanks for tuning in. Don't forget to subscribe, share the episode, and join me next time for more insights that help you navigate the markets with confidence. Until then, trade smart and stay curious.